Hey guys, hey guys, welcome for this quick update. And I wanted to release this quick update for YouTube before I actually make my weekly video, which is gonna be Bitcoin all time frames, technical analysis. But I wanted to release this quick update before, just to not mix subjects, and just so that I can focus on technical analysis on my for my weekly video. But I wanted to release this quick update to talk a little bit about the stock market, why I haven't been so bearish on it, and why I'm actually very bullish for this year and next year for the stocks. So I guess let me show you the views first here. I'm at the beach, beautiful spot here. This is my pina colada. And okay, let's go. Let's get into it. So let's see the chart for the S&P 500. This is the chart. If we go to the weekly candles here. This is my very first sign that the bottom might be in. I can't really call the bottom yet, but I really want to. But this is the first sign. You can see this weekly candle. The green candle here is a bullish engulfing candle. You see it opened slightly below the close of the previous week, and it closed well above it. So it's engulfing the previous candle. This is a very, very bullish candlestick pattern. Now, if we go to the daily and I show you the lines here, you can see this broke outside the diagonal trend line, and it also broke above this first red horizontal line here. This is the breakout line of this W pattern at the bottom. So everything seems to point that the stock market has bottomed. So the last sign, the last signal I'm waiting for before actually being like 90% confident that we've bottomed is if we close a daily candle above the 200-day moving average. So right now the 200-day moving average is resistance, so you see we're getting kind of rejected here, although not too much. Also, we are overbought for the short term because it went up a lot and very quick, so obviously we are overbought for the short term. But I would like to see a daily close above the 200-day moving average to call the bottom for the stock market, and then I would like to see a little bit of consolidation above the 200-day moving average, and then I think we are clear to make the target up here at 4,714, which is almost all the way back up to the all-time high, as you can see here. And this target comes from this W bottom pattern that we have here. So that's what I have. I think once we close above the 200-day moving average, we're clear to make this target, and I'd be calling for the bottom of the stock market. Now, when it comes to geopoliticals and fundamentals, if you're interested in these at all, guys, just come and join. Go ahead and join my free Telegram channel. And if you just scroll up a little bit here, you're gonna see there's this long text here. So read this, and here I make my point a lot better than I did on my previous YouTube video last Tuesday. I talked about this on YouTube last Tuesday, but here in this long text I make my point a lot better. This post got a lot of reactions here, 19 likes and 4 little fires. So I mean, it's easier to make your point when you can just write, and then you can correct things and think about it, and you can make your point a lot better than in a 10-minute video where I don't even have a script or anything. So come and read this if you're interested about this. And then, well, it's actually before this one I called the bottom, what I think to be the bottom for Alibaba. It corrected 77%, and when I saw this volume at the bottom and the V-shape structure, I shared this here. I think we bottomed for Alibaba. The same goes for most American companies and some of the Chinese companies, which have been going down a lot since COVID hit. And so I think a lot of American companies and Chinese companies have bottomed already, but I'm waiting on these signals on the S&P to to have like the last piece of evidence before I actually call the bottom for the S&P. And then what else? And then another thing that makes me bullish for this year and next year for the stocks is the interest rates raising, which is expected for this year. I mean, I share this also on Telegram, so if you come and join here, you can see the chart at the top here is interest rates, and the chart up at the bottom is the S&P 500. So you can see every time interest rates go up, the S&P, thank you, the S&P 500 goes up at the same time. There's never been a time in history where the stock market went down while interest rates were rising. So I don't really know where, like the fact that the Fed said there's been a statement from the Fed saying that they are going to be raising interests 6 more times this year, to finish the year at 1.75, and then one more time in January of next year, in 2023, to top the interests at 2%, which, by the way, is a little bit lower than the previous top for the interest rates here, which was at 2.5%. So I think this is extremely bullish for the stocks. I don't know where people get that raising interest is bearish for the stock market, because it's never been the case before. And so I wanted to show that, and you can actually cross-check yourself if you go here to TradingView and you find the interest rates chart, which is the symbol is Fed Fund. So you can go more into the past and cross-check yourself. So yeah, that was all. I didn't want to make this video super long. It was meant to be just a very short video here before I make my my weekly video for YouTube. So guys, I'll leave it here. Thank you very much for watching, and I will see you very soon. Bye.